getting on my nerve, man. I'm sick of it. I'm talking about how the setup here got so bad, man. How the setup here got so bad. The doggone my sound, I'm in Discord, the soundboard gone. Like the soundboard gone in Discord. Y'all know we going like the voice channel. And inside the voice channel, it used to have a thing at the bottom to say like sound like how you do the all of that. I'm sitting up here thinking I'm tripping. I'm thinking I'm looking in the wrong place. But only thing they got down there now, it says start. It says start activity. It's got share your screen, turn on your camera. That's the only thing they got down there now. And like the little soundboard thing is gone. Do anybody know? Did they remove that from Discord? How y'all doing, everybody, man? I'm 38 hot right now. I don't have my little no more. I don't have my sounds no more. Man, I'm heated right now. Y'all just don't understand. Y'all don't understand how I'm heated right now, man. Y'all don't understand how I'm heated right now. And gang, y'all know how I am. When something, when I get on something, man. Discord. That's a year ago. That's a year ago. I don't know, man. Anyway, I ain't got no more sounds. Good evening, everybody. Y'all see the disclaimer there. Y'all know who I am. Y'all know what it is. It's the price action recap. Intraday price action recap. How y'all doing today, man? I'm hot because my sounds. I ain't got my sounds. We gonna go ahead and get right into it, man. 38 hot. How y'all doing today? Who we got up in here? Who do we have up in here? Gonna disconnect from this voice. Close out the Discord. Put it over there. Put that over there. Okie doke. Let's get to it, man. Where everybody at, man? Where everybody at?
It's Friday.
I see.
Checks out. Everybody got their check last night for the first, so you know.
I see. Ain't nobody up in here.
Everybody in the mall, at the fast food spots, you know.
It's slack up in here, man.
For some small
man. I need to go lay on the couch and watch Final Destination. Ain't nobody in here. Ain't no need for me to sit here and talk to an empty room. Ain't no need for me to sit in here and talk to an empty room.
So it's just the 4 people. I see 4 people. I don't know what you like.
Yeah, it's 4 people in the Zoom. It's about, it says like about 12 people on YouTube.
Right on the South Fork.
Oh, that's half a class, 16 people.
What you looking at? The news?
Oh, yeah, that's loud. Yeah, that's news.
Yeah, I got the Zoom link pinned in the chat on YouTube if anybody want to pop up and ask a question. Today was the last trading day of May. For those who do not know, if you look at your calendar, today was May the 30th. Tomorrow is the 31st. The 31st falls on a Saturday. The first falls on a Sunday. And the second falls on a Monday. So June the 2nd will be the first trading day. Tornado, where tornadoes at? Where y'all watching for tornadoes at?
I wasn't really paying attention.
Somebody put in the chat, said watching the
Oh.
news, 2 tornadoes.
Yeah, says something about a hurricane out there somewhere too.
Oh, yeah.
Yeah.
Yeah, so today was the last trading day of the month. So let's pop up to the monthly chart and see if we got our inversion fair value gap. Who think we got an inversion fair value gap? Who think we ended up with the inversion fair value gap that we was looking at on the monthly time frame? Do y'all think we got it based off price action?
Yes, sir.
Yes.
Yeah, I think we did.
I think we did too. Let's see. Let's see if we got it. We got it. We got the inversion fair value gap on the monthly chart. All right. Looking at the continuous chart. All right. If we go and look at a continuous contract, that's NQ, 1 exclamation point on trading view. These are monthly candles, right? We said that the monthly was in a buy program, right? Meaning that we was drawn toward buy side liquidity up here, right? We expanded up, taking out buy side, create all-time highs. We were anticipating a retracement back into the discount, right? Once we came back into a discount, we was looking for this bullish order block, this bullish fair value gap, right? This bullish breaker over here. We was looking at this mitigation block, this mitigation block, whatever PD array of choice that you're looking for a to act as your discount support, right? We got that here. Once we got the discount support, we were anticipating this SIBI from March 2025 becoming an inversion fair value gap. Why were we anticipating that? Because the draw on liquidity is here, and that means we want to see it push through bearish PD arrays. That's a signature of a buy program, right? Price disrespecting premium and bearish PD arrays, meaning pushing through it and respecting discount or bullish PD arrays, meaning trading to them and rejecting off of them as support, right? Those are signatures of a buy program, right? So another bit of confirmation on the buy program. We got our monthly closure above the right there, the monthly fair value gap, right, from March 2025. Bearish month, bearish fair value gap month 325, right? Got our bearish fair value, a gap. On the weekly time frame, do we have anything down here on the weekly that I wanted to show? That's a weekly low that I haven't moved in forever. Man, when the last time I moved this weekly low? Oh, this is the continuous contract. That's why. All right. Now let's go back to the front month. All right. Now on the weekly time frame, right? So on the weekly time frame, back here a few weeks ago, we said that we want to see this right here be used as support, right? We never traded back down to it, right? We created it. We opened up last week, right? We opened up last week, traded up into this SIBI, almost to the high of it, came it down, closed near the low of it this week, right? So we're still in between the tale of two cities on the weekly, right? We're still here on the weekly at an area of consolidation, an area of accumulation, right? We're just accumulating here on the weekly, right? We're still in between the tale of two cities, okay? Price did not show willingness to trade back down to this BISI just yet. We did trade up to the high, almost to the high of this SIBI, and we got a nice rejection off of it, right? We're getting ready to go into a new month. This nice rejection off of this right here, right? That's, you know, a nice signature when you want price to pull down into this discount PD array to use it as support, right? We go up above these highs, trade almost to the high of the inefficiency, right? Trade into the bearish order block and then reject back down, respecting the bearish order block, respecting consequent encroachment of the imbalance, right? So now this rejection down, rejected that high. Now you anticipate it to come back down toward the low that sent you there, right? This low right here went back up above that high, rejected, anticipating price coming back down, right? Into the area of support, right? That will be nice, healthy price action, right? To go into a new month and come make a bottom wick on the monthly candle, right? How do you make bottom wicks on candles, right? At some point in time, you trade down and it's a big red candle, and then you turn around and go in the opposite direction, giving you a bottom wick from wherever it opened up at. So you want to see it come down and create that bottom wick using that as support for the bullish narrative, right? For the bullish narrative. Why are you talking about the bullish narrative? Because the weekly, right? The weekly is also in a buy program, right? We had a bullish breaking market structure there. We had a change in this bullish change in the state delivery there, right? The opening price of that March 24, the week of March 24 candle there, right? That's your change in the state delivery price. The high of that candle from March 24th, 2025, that weekly candle, that's your bullish breaking market structure. That high right here, see, swing high there, came down, took out the sell side, trade back above that high right there. Boom, bullish breaking market structure, right? This is the order block. This is the lowest order block in this rundown that took out sell side liquidity, trade back above that opening price right there. That's your bullish change in the state of delivery, right? So the weekly is in a buy program, right? So you're looking for reasons to buy and some sort of discount, right? Looking at this here as a balanced price range. We offer sell side delivery, offer buy side delivery, left that area, balanced price range. So now you want to look at the area that left there, right? This fair value gap from the week of May 12th, 2025. That's your imbalance. That's in the discount of that range right there, right? Trade back, discount, nice buying opportunity to participate, continuing toward all-time new highs, right? Moving into a new month. Perfect opportunity to start the month off going down. Whenever we get a open and we're bullish, we want to see price manipulate below the open, right? We want to see it manipulate below the open. When's the best time to do it? When you first start out. No need to run up and then try to come back down below the open. And yeah, just go ahead, open up, drop, then rally, right? Start it off, go get that discount PD array and go back up. Okay. But we started the week off here, traded up to the high of the weekly SIBI, right? Came back down and then rallied back up. This was a strange week, right? Because we started off like blasting off on, what was that? Tuesday, I think it was. Tuesday, Wednesday, one of the days we was like to the moon. We was to the moon. Let's go to a daily chart. All right, daily time frame. We got Monday right here to the moon. Monday we was to the moon. Tuesday, pretty much nothing. Wednesday, we went to the moon and then dropped. Right. This the day when I closed that. I bought them options on Tuesday, right? On Wednesday, then on Thursday, closed them out, right? When we was up here, closed, locked in 50%, then got stopped out, and we just kept dumping for that day. And then today we dropped down, then came back up and closed pretty much as at a doji right here. Right? Wild ride this week. Right?
It was a holiday week, so there's only 4 candles this week.
Yeah. Because you got Tuesday, Monday and Tuesday's trading is in that Tuesday candle. Then you got Wednesday, Thursday. So Wednesday was when I bought it. It was the second trading day. So Wednesday is when I bought it, closed it on Thursday, and then today, right? So Tuesday to the moon, Wednesday kind of nothing, Thursday to the moon and back, then Friday, right? We dropped down into the bullish order block, and we closed out the week respecting this daily BISI from the Tuesday candle that was created on the close of Wednesday, right? We closed respecting that on Thursday and Friday, right? So Friday, we traded down into it, right? Just tapped it a little bit, looking like it's going to be an institutional order flow entry drill, rejected off of it, opened up Thursday, went up just a little bit, then we dumped off, came back up, closing at a doji, but still respecting the bullish fair value gap right there. Okay, close still respecting that. We're still inside this area of accumulation, right? We have worked the sell side, we've worked the buy side, and we closed right dead in the middle, right? I ain't gonna say right dead in the middle, but let's get the Fibonacci and see exactly where we close. Slight premium when we go wick to wick, right? And body to body, it's deep premium, right? Closed in a deep premium, we go to body, right? But it's still roughly in the middle. Wick to wick, slight premium, roughly in the middle. We got a daily BISI that's sitting right in the middle of the road, right? So we're still in the middle of the range, this little area of consolidation. We're just accumulating buy side and sell side. Like I say, we've worked the sell side on Friday, and we worked the buy side on Friday last week, worked the sell side of this range, trading down into a BISI from the 12th of May. Then Thursday, we worked the buy side, working into a daily SIBI from February 24th, 2025 on the daily, right? Still in the middle of the road. So on the weekly, we're in the middle of the road, in between the tail of two cities, right? On the daily, we're in the middle of the road, in between the tail of two cities. Got a BISI, got a SIBI, right? BISI below the consolidation, SIBI above the consolidation. Traded into the upper quarter, almost consequent encroachment of the BISI, traded all the way up almost to the just falling just short of the high of the SIBI. But we've just been ping pong, ping pong, ping pong, right? Just ping pong in between those opposing imbalances. All right, let's drop down to a 15-minute chart. Go to a 15-minute chart. Okay, so this right here, we had a holiday, right? We had a holiday. So on the holiday, right? When we look at the holiday, we have two 6 p.m. prices that you want to take into account, right? First 6 p.m. price is Sunday evening, which is 20,978, because that's a opening price for the futures trading. The New York market was closed on Monday morning, right? And then 6 p.m. Monday evening, right? That right there, opening price there at what is that? 21,280, right? At 21,280 there. That right there, 21,281 and a quarter. I'm sorry, right? So that's Monday's open. So your true new week opening gap is from Friday's close, right, all the way up here to Monday's open at 6 p.m. Tuesday's open. I said Monday's open. Tuesday's open at 6 p.m. right there. All right. So with that being said, we see that price, right? Once we opened on, this is our open right here on Monday evening, right? All of this trading right here, this is all the holiday trading on Sunday night up until Monday at like 12 or 1 p.m. Right? I think it closed at, yeah, it closed at 1 p.m. So this is all that holiday trading. Okay. Once we opened on Monday, see our price traded, it respected the upper quadrant of the entire new week opening gap, right? So this is the new week opening gap based off of Sunday's open, and up here where I got this line there, and now I got this whole Fibonacci tool marking it out. This is the entire new week opening gap based off of Sunday evening's open, right? If you're not a member of the Asian Assassins, you're welcome. We had a special pop-up talking about that with the Asian Assassins, right? Michael talked about it before. It ain't nothing that I made up. It's just something that I want to point out to the Asian Assassins, because they, from my understanding, primarily want to try to watch the Asian session because of their, work-life schedule. But respect it that your new income generating robot has been activated. All you need to do is turn it on. Instructions here. HTTPS, click me. I tell you, boy. All right. So again, respecting that upper quadrant, we displace away, come back down, respecting that upper quadrant, right? We displace away, go way up here, right? And do some stuff. We talked about this right here. Once we trade it down over here, we say, hey, that right there can very well possibly be a smart money reversal, right? Looking for it to come back down and complete a market maker sell model, right? And then we come back down, and where do we go? Somewhere, vague, and what's the word? ambiguous. Is that the word I'm looking for? Right? You come somewhere down here. No, it stops right there at the equilibrium or the consequent encroachment of the entire new week opening gap from Monday evening's opening price, right? From Monday evening's opening price. I'll say it's two different opening prices you want to watch, right? I like to default to the larger of the two, but you want to keep in mind both. So if prices trading near them, you want to understand that's an important open too. So you got a close, a open, and a open, right? Remember, open, high, low, close. Those are the four pillars, right? Those are the four pillars of price. The open, high, low, close, right? That tells you everything you need to know about price action, right? The open, high, low, close of a candle, open, high, low, close of a session, open, high, low, close of a day, open, high, low, close of a whatever, open, high, low, close. Okay. Once we came down to that consequent encroachment today, right? We reversed back up, came back up to that buy side, and closed off of the high to finish out the week. Let me see, we opened here. Okay, so that's a green week, right? We got us a green week. We opened here, closed there, right? Let's test our theory. Power of 3, put it on a weekly candle. Wrong thing. It's already on a weekly candle. We look over there, boop, there we go. Green week with a long wick, right? Open here, close there. Now, if you look at the weekly or the daily candle, this is all you're going to see for a new week opening gap. That's the only thing you're going to see. Right? Can somebody tell me, if you look at a weekly or daily candle, why is this the only thing you're going to see for the new week opening gap? Somebody tell me. Somebody tell me. I'm listening. "12 years ago today, you won the Georgetown's talent show as a kindergarten." Oh, that was 12 years ago from today. So he performed in the audience instead. Ain't nobody gonna tell what's going on.
What area, sorry? Can you show us?
I
What's
said,
the question?
why, when we look on the weekly or the daily chart, why is this the only thing that you would see as a new week opening gap for this week?
Is it because of the holiday, like what June
Yes.
only taking account Friday to
Yes.
Tuesday?
Yes, because Sunday and Monday is lumped into the Tuesday's daily candle. So the open on Sunday, right, is the open of the weekly candle. Okay. The open on Sunday is the open of the weekly candle. The open on Sunday is the open of Tuesday's candle, right? Because Monday was a holiday and the New York session is closed. So since Sunday is the open and Monday was a holiday, Sunday up until 1 p.m. and then 6 p.m. up until 5 p.m., 6 p.m. Monday up until 5 p.m. on Tuesday, that's all lumped into Tuesday's candle, right? So on the daily chart, you only got a Tuesday candle. So the weekly chart starts on Tuesday, right? And if we go to a weekly, right? If you go to the weekly candle here, right, and you hover over this week right here, it says 527. Tuesday, 527. Because that's the start of the week, because Monday was a holiday. But Sunday night is the first opening price for the week, right? So you get that first opening price, and then it's dated for Tuesday, right? And that's why if you look here on the weekly chart, right, you see Friday's close, last week's close, which says 519, which is a Monday, right? Let me turn on Fancy Dancy. Come on, Fancy Dancy. There you go. Oh, it don't show over the calendar. So 519, right? Oh, I can't even draw over the calendar. Can't do nothing. Do this right here. Right? So 519, okay. Yep, I could draw there though. Where's my color? All right. So 519, which is a Monday, right, is there. And then 527, which is a Tuesday, right, which is there. Okay. So when we, so when we come here, 519, that's the close for 519. 527, that's the open. So when you look at the weekly chart, you say, hey, there's my new week opening gap. When you look at the daily charts, right, you say, hey, there's my new week opening gap, because Friday's close is here and Tuesday's open is there. But since Monday was a holiday, right, we want to keep in mind that very important opening price of Monday. Why is that? Because Monday is a algorithmic open. That's a 6 p.m. open, right? So you want to take into account the closure from Friday to the open 6 p.m. on Monday. That's your entire new week opening gap based off of Monday's price. Okay. And then you can do little fancy stuff if you want to on your own and get like super in depth, be looking at stuff like I do, right? Stuff that Michael don't really talk about, where I would come in here and I would go to, where is it? Monday. This is Monday here. Tuesday, no. Where are we? Oh, this is Friday, Monday, 7. Here, there you go, right there. Okay, so come here. Monday at 12, boom, close right here. Okay, so that's the actual close there. So we close here, boop, come there, and then look there. There's nothing there, right? In this case, there's nothing there, right? There's no open, but you can look at that little difference right there too, between that close and that open right there, if it's a big difference, but there's nothing there. But I look at all of that stuff too, right? Not so much, I don't like really focus in on this that much, but I do if it's, of any significance. I look at it and see how price is reacting to it, right? Just stuff that Michael don't talk about. And I just, because I believe that time and price is fractal. So anything that I look at in accordance to time, from an open to a close, I look at it from an open to a close throughout, right? From an open to a close, because the algorithm remembers that. Just like we look at the difference between the New York close to the New York open. He called it an opening range gap, right? You're looking from a close to an open. Same thing. You're going from a close to an open. It's the same concept. The close of a day to the open of a day, the close of a session to the open of a session, right? Because it's the actual close of the business day for the New York session and the open of the business day. That's where you get your opening range gap, right? Same thing, a open to a close. The 4 pillars. Remember those pillars, right? Open, high, low, close. Those 4 pillars. Tell you everything you need to know. Now, we've looked at our entire week, right? Broke it down over days, looked at how we moved throughout. We've broke down price throughout the week. So now we'll go in and look at today's price. As we see, when we came down here, we was anticipating price to draw down lower. Talked about that yesterday and was like, hey, this right here could be a smart money reversal, looking for price to go lower. Talked about that today on the tape reading stream with the diamond members, right? So we had that, I had that sell side liquidity right there marked out. I said that this right here was because we started the day here. This is where we start the day off right here. So starting, take away all this right here. This is today's price action, right? So we were here. This was the next level of liquidity there because we had traded below here, right? This was the next level, but I opted to this because it was relative equal lows, right? So boom, there's the level of liquidity that I was marking out. And this swing low and that swing low is all internal liquidity for this dealing range right here, right? So wasn't anticipating price being heavy enough to get here. So that's why I had that marked out as my sell side liquidity draw right here, right? Nothing super fancy about it, right? Price had traded below this low here and closed out the day. This was the daily low, right? Before we open up here, none of this right here exists. Look to the left. Okay, boom. Sell side liquidity there. Oh, we got relative equal lows. This is the low I'm anticipating it to draw into. Not anticipating price being heavy enough to get here. So this is my draw right there. Nothing super fancy about it. Looking at price. What is price doing? We're in a sell program. We've stopped right here. We talked about this yesterday. We stopped here. This right here was directly across from a area of accumulation. We're looking for this right here to act as an area of distribution, right? Because we're in a sell program, not trying to pick a bottom. So we're just looking for sell side liquidity that we can reach for, anticipating this to be an area of distribution. What do we get? Distribution below a low, rally off of it, close off the low. Right? So looking at the entire week's performance, right? The entire week's performance. This is our holiday here. All right. That's our holiday there. This is when we actually open up, right? We get accumulation, we get manipulation, then we get distribution below the low, right? Nice little accumulation, manipulation, distribution, right? We accumulate at or near the open, we manipulate higher, and then we distribute below an old low, right? Right there over the entire week, right? Over it is all about, you know, the market efficiency paradigm, MEP, right? MEP, market efficiency paradigm. The market is engineered for the efficiency of smart money, right? For the efficiency of smart money. What does smart money do? It engineers liquidity, right? We consolidate here, right? Set a low, take off, set equal lows, boom. What has been engineered right here? Sell side, right? Sell side has been engineered right there. We got a liquidity pool right here, right? Tim, what makes that a liquidity pool? Because we trade down, we took out sell side liquidity here, created a new liquidity pool. We traded up, created relative equal lows, right? Enticed more stops to move there, right? Because we didn't take it out. And then we manipulated away from here. And then we have a smart money reversal and come back and engage with that liquidity pool that was engineered over here. So we accumulate, we manipulate, then we come back and distribute in that liquidity pool. Nice reaction off of it. Tell we offset a lot of positions right here because look at this bounce. Took back off all the way back up to a short-term high. All right. Minor buy side came all the way back up to a minor buy side. Nice rally off of this right here. You can tell we offset a lot of positions right there. Right. You got to start thinking in the context of the market efficiency paradigm. And as I sip on me a drink of water, remember that this educational moment is being brought to you by Back to Basics. Coming to WAP very soon. Back to Basics video series. A video series put together by yours truly, Timothy Lee Rogers Sr. It's going to be pre-recorded information based off of everything that I've ever covered on this YouTube channel. If you're a very beginner, a novice, or an expert trader, this is for you. It's going to go from everything from what is the stock market to what is a candle to how do I even do it? How do I get a brokerage account? How do I understand how to read price? How do I trade price? How can I do? What are futures? What are options? What are shares? I'm going to talk about everything. It's something there for everybody. Coming to WAP very soon. And if you are part of the gang, meaning you're a part of the Discord that you pay through WAP, if you're a part of the Discord that you pay through WAP, the new Discord channel, the Big Spiders private Discord, if you are a member prior to May 27th, 2025, you get access to it for absolutely free. Everybody else, you're going to have to pay a fee. Now, let me sip me some water. Oh, that's some high quality H2O right there. Keep me another bottle on deck. Now, where were we? Oh, yeah, the market efficiency paradigm. You want to start to think in terms of the market efficiency paradigm, right? And now let's go in and look at today's price action. All right. Look at today's price action. And today's candle was a itty bitty little doji candle. Itty. Did we open and close in the exact same place? Nope, just a little bit off. Right? A little bit off. Not a complete doji, but doji-like. Right? Because a true doji is going to open and close in the exact same price. Right? So it's doji-like, very close to it. We just call it a doji. Right? We just call them a doji. Okay, let's put it on. We don't need this. I guess I could leave it. I'll leave it there. Let's put it on 5-minute candles. All right. Matter of fact, let's just put it on 1-minute candles. We're gonna put it on 1-minute candles. All right. We're gonna put it on 1-minute candles. And the beginning of the trading day from 6 p.m. Most of it was just a bunch of consolidation, right? From 6 p.m. all the way over until 8 o'clock, right? Just a bunch of consolidation, right? So we're just consolidating for most of that time. So I'm going to mark out this high right here, right? Little buy side liquidity. Right, gonna mark out that high right there. That right there is the high created at 1:45, 1:44 a.m. Right, created that high at 1:44 a.m. And then we got this low over here. That low right there was created at 9:05 p.m. Okay, so this right here was created at 9:05 p.m. That's the Asian low. This right here was created at 1:44. That's going into the London kill zone. Right. So we got the Asian kill zone and London kill zone high right there. Right. So we coming over here at 7 a.m., 7:09, 7:10, right? Right at the end of the 6:50 to 7:10 macro, right? We blast off during the 6:50 to 7:10 macro, right? 6:10, 7:50 macro. We start here, drop down into this short-term sell side, then rally away into the buy side, right? Take out that buy side, right? We come back down and then we engineer relative equal highs, right? We had this annotated this morning on the tape reading stream, right? I'll just mark it like this with dashes, right? We had this annotated there. Okay, engineer relative equal highs. What do we say the algorithm does? Right, it engineers liquidity. Right, we came above a prior high, created a new liquidity pool. Okay, came down, engineered more buy side by creating relative equal highs. Right, and then we dropped all the way down. Right, taking out sell side. Right, the sell side we took out was what? The opposite end of this range here. Right, so we took out that end, came down, took out that end. Right, so now we got a new liquidity pool there. We have a new liquidity pool here. Right, so now this is our dealing range. Right, we're looking inside this bearish dealing range right here for our trading opportunities. Okay, looking inside this bearish dealing range for our trading opportunities. Price comes back up to the new day opening gap. Right, we come back up to the new day opening gap, and here at 9:30, this is our opening range high. Right, that's our opening range high. The highest high that's created between 9:30 and 10 a.m. Right, time and price, right? This is the highest high created between 9:30 and 10 a.m. Right, come all the way down here, right? And we create our opening range low. This is the lowest low created between 9:30 a.m. and 10 o'clock. 9:30 a.m. and 10 o'clock, that's your opening range for the New York time. For the New York session right here. Remember, time is king, right? Time is king. Opening range, first 30 minutes of the thing. What is the thing? The thing is the New York AM session, right? The New York AM session opens at 9:30. The opening range is the first 30 minutes of the thing. What is the thing? The New York AM session. What's the New York AM session opening range? 9:30 until 10 o'clock. All right. 9:30 until 10 o'clock. Right. That's your opening range. Remember, time is king. Okay. Okay. Get it? Got it? Good. All right. So then we have our opening range high, our opening range low. Okay. We come back up, price draws up, and we engage with
the opening range high here on this 1028 candle, right? We're here up here engineering liquidity, a bunch of chopping back and forth, right? And then here on this from 1037, 1038, 1039, we go up here, right? And create a swing high there, engaging with the buy side liquidity again. And then we come down and we take out sell side, right? So now we're hanging out here. Now that we've engaged the buy side, right? We're not displacing through it, right? And then we come down and we engage the sell side. So we got us a bearish breaking market structure there, right? So we're inside a bearish dealing range. We're in a sell program, anticipating price to draw down into the sell side liquidity, right? So we come here during this 950, this 1050 to 1110 macro, right? Let me blow it up big so you can all see it, right? Time and price. So during this, well, right here, during this 1050, let me get a box so you can see it good. All right, 1050 to 1110. 1050 macro window. Right. So during this 1050 to 1110 macro, right? Remember what we said we did up here. We engaged the buy side of our range, right? We set opening range here. Come here. We set the opening range here, right? When we engineered relative equal lows over here. How do we do that? We came down and we didn't take out this low right here. After taking out that prior session low, right? We traded down, set that low, engineered relative equal lows, right? Remember, new liquidity pool, engineered sell side. We engineered buy side, and we had relative equal highs there with a single low, right? Traded up to the new day opening gap, came down, relative equal lows, right? So now we got relative equal lows below price, relative equal highs above price, right? We trade back up, and right over here during this macro time after engaging with the buy side, right? So what do? We allow price to set our range. There's your dealing range, right? So once we set our range, and then we wait for it to engage with one side of the liquidity, right? We engage with the buy side. And then now, since we're bearish, we're looking for, God dog it, we're looking for bearish signatures, right? Since we're bearish, now that we've engaged with liquidity, right? We're looking for bearish signatures. So we come up here, we attack the buy side there. We come down, we get a bearish breaking market structure right here, right? Bearish signature 1. Okay. Now that we got our bearish breaking market structure, now what are we waiting for? Time, right? So we come into a macro time, and during this macro time, what do? We get a wig snatcher. Tim, what is a wig snatcher? Price takes off in the direction of the draw, right? Reverses back, tricks in longs for people who want to chase price going up, right? And then it reverses back and takes them out of the game. That's the wig snatcher. Bing, bop, 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 boom, bop, bam, right? Takes them out the game. And then it offers what? An opportunity to get short on this SIBI and balanced price range right here during this macro time, right? And then it comes back, it drops down to the I think that's a daily fair value gap, I'm not sure. Comes down there, and then it comes back once again, highly manipulated, high resistance liquidity runs, come back one more time here, halfway through the 11 o'clock hour, giving one more opportunity and taking out anybody who trailed their stops right there, right? Dirty game we play. Because if you got short here, your stop was there. When price took off like this right here, it went boop, 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 right? Anybody that got down here, they say, hey, I'm gonna trail my stops. Probably, maybe trail even down to there, because this boop, 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 like that right there, definitely trailed to there. Somebody might have been just aggressive enough to trade it there. Then guess what happened over here? Halfway through the hour, took them out. Come here, give me my money, right? Took them out. Once we took them out, then price dropped down to the prior day low, right? Once we hit that prior day low, right? What do? Nice retracement back up. Boom, give an opportunity to get short here at midnight inside the SIBI, right? That right there is during the 11:50 to 12:10 macro, right? Time and price. Time and price. Come here. Time and price. Right there. 11:50 to 12:10 macro, right? 11:50 to 12:10 macro starts here, right? We drop down into the imbalance, rally above the short-term buy side into the imbalance there above midnight price, right? Drop down, trade back up, deep retracement, right? Deep retracement back up into this inversion fair value gap right there on that 11:55 candle. Time and price, 11:55 inversion, traded back up to that, drop down, right? Went all the way through, ignored this right here. That's the old sell side that we've already taken. Get out of there, don't need it. Drop down, engaging with the opposite end of our opening range. That's the buy side we engaged with first, right? Got our bearish signature, traded back down to the sell side. Bing, bop, boom, bop, bam. There you go. Pay the trader. And then it also kept sliding down into the sell side that we have pointed out before the market open, saying this is the next stage liquidity that we anticipate price trade into because of those relative equal lows right here, right? Those relative equal lows there. Didn't choose that one, chose that one because it's relative equal lows, right? Price has traded away, looking for the algorithm to come back and engage with that liquidity that it engineered. Came down, like we said, to consequent encroachment of the true new week opening gap. Okay, price turned around and rallied. This is put me on 1 minute time frames. Right. Once we got down there, price got down here, right? Rallied back up, and we dropped down here, right? During the 1250 to 110 macro. Time and price. All right. 1250 to 110 macro. Right there. Time and price. Right. We come down. We drop down into that sell side. Right. Then we rally back up a little bit. Then we trade down. Right. Going into the 1250 to 110 macro. We engage that sell side again that we had just created when we dropped down. Took out the sell side, traded up, got what? A bullish breaking market structure right there. Bullish breaking market structure during this. We engaged liquidity and got a bullish breaking market structure during this 1250 to 110 macro, 1250 to 1330 macro for those who understand the 24-hour clock or military time as we used to call it, right? So once we got that there, we started to engineer a little liquidity here at this breaking market structure at this, right? We got a bullish breaker here, right? Low, high, lower, low, higher, high, bullish breaker, last up close candle. And this high right there, right? Working that bullish breaker, working that fair value gap, working that inversion fair value gap right there. PD array of choice, right? Coming down, working that area there, right? Displace away, taking out the buy side, right? And we come over here, right there, drop down, manipulating out this short term sell side there, drop back down into this area of consolidation there, drop down inside this SIBI, BISI, balance price range, whatever you want to call it there. All of this right here, all this little area there, we got these overlapping fair value gaps inside this area of consolidation right there. Drop down into it, rally back up. Just a quick little manipulation move, right? Trade up, take out the high, another deep retracement back down, right? Trading below the bodies of these candles right here, right? Trading down into that rejection block right there below the bodies of that candle. Come back up there. We're just hanging out around this 25, this upper quadrant of that true new week opening gap, right? Just around, it's a high resistance type thing, engineering more liquidity. It ain't nothing but an area of accumulation, right? All this right here is just an area of accumulation. That's all it is, right? We consolidate in there, expand up, trade back down, right? This right here end up just being like a overall huge area of accumulation because we consolidate, move up, consolidate, move up, consolidate, move up. You see what I'm saying? Right? That's all we kept doing. Just start stair stepping up, right? As they're gonna consolidate, consolidate, move up, consolidate, move up, consolidate, move up, consolidate, move up, consolidate. Big consolidation, but where do we get back to? Right? Remember that engineered buy side liquidity that we was talking about way over here, right? So the algorithm engineered buy side, manipulated price away, came back, engaged that buy side. Once we engage that buy side, what do? Closed off of the high, right? Engage that buy side, drop down, closed off the high, right? Time and price, same thing. Engineered buy side, manipulated away, engage that buy side, right? Then we talked about over the whole week, right? What do we say? We came over here, we engineered sell side, right? Engineered sell side. Come here, manipulate away, right? Throughout the week, manipulate away, come back, engage that sell side. Same thing. This was done over a day. This was done over a week. One was in the engineered sell side and attack sell side. One was engineered buy side and attack buy side.
And this teachable moment has been brought to you by, you guessed it, Back to Basics video series. That's all I got, man. What y'all got for me? It's 7:07 on a Friday. We done been on here too long for a Friday night. We done been on here too long for a Friday night. And since the views are, the watchers are so slack, it's only a few people in here. There's not going to be a replay of tonight because I'm taking my precious time to sit here on a Friday and talk about the recap of the week. It ain't nobody here. It's few people here.
I was gonna say we here. You know, if they don't want to get the game
We
for the
here,
jewels,
we here.
Look, what are we, chopped liver?
okay, we here. That's their
We
fault.
here.
They don't want to learn. We want to learn every day.
Nobody here.
Yeah.
I ain't gonna have the replay up for them to come at their leisure on Sunday night and be like, oh, let me see what Tim talked about on Friday. Oh, Tim, this Jim put gems on gems.
It's Friday, man. Checks out, man. It's Friday. People gotta spend money.
It's just gems. Oh, I appreciate it, gems. What you doing at you out hanging out with your family right now, and I'm sitting over here
You know what I'm saying? With the True Blue gang. With the True Blue gang. What y'all got for me, man? Anybody got anything for me? Did y'all find value? Is my dog Sherwin here? Sherwin, you here? Are you here, Sherwin?
Sherwin,
If
he on
Sherwin
top of
here,
these.
if Sherwin here, I leave the live stream up. If Sherwin, you in here?
Yes, sir. Yes, sir.
What's going on, Sherwin? Since Sherwin here, we gonna keep the live stream up. That's my dog. Sherwin, my dog. So we gonna leave the live stream up called Sherwin here. Long as Sherwin here, that's all I need. Hey man, did y'all find value in this tonight? Did y'all find what's up, Empire Traders?
Always.
Thank you. I appreciate that. Serious question. Are y'all starting to see, right, the importance of understanding of waiting until time and price align? Are y'all starting to see the importance of that? Can y'all see the signatures where when we have time-based liquidity formed, right? Meaning you create a new liquidity pool at a certain time, a new liquidity pool at a certain time. This is your dealing range, and then you watch how price interacts with that. If you're bearish, you're looking at it, okay, it interacts with the buy side, and then it engineers sell side, interacts with the buy side, and then goes and attack that sell side. If you're bullish, right, it engineers buy side, right, engages the sell side, and then goes back and attacks that buy side, right? But it's all based off of time-based liquidity when time and price align, right? Are y'all starting to see that? Are you grasping it, right? I've been trying to say it every kind of way I can think of, try to make it memorable, try to get you to remember it. But are you starting to grasp it? I'll take y'all silence as a no. No.
Yes, we are.
No.
Just in the moment.
Too late. Y'all are taking that as a no. Taking that as a no. Who in throwback gang? Deborah, you throwback gang. If I wish here to learn and Shell was in here. She throwback. Rhonda throwback gang. FC, you throwback gang. Who else? Let me see. Who else in here that's throwback gang? Right? Tish throwback gang. Look here. Hey, when my feelings get hurt, or if I feel like y'all ain't getting it, y'all remember when Felicia, you remember when I kicked everybody out? I said, I'm closing the Discord down. I'm shutting down everything. Y'all ain't getting it. Y'all just want to watch me. It's time for y'all to go flap your little birdie wings and fly. Shut down everything. Whoop. I shut it all down. I was like, y'all ain't getting it. I don't know how to say it no other way. Y'all need to get out there and just start doing it. Shut it all down. I remember because I was sitting outside Planet Fitness when I did it. I was on my way to Planet Fitness to go work out, and I was sitting in the truck, and I popped up in a Discord, shut it all down. Right? Yep, hurt my feelings. Felice said it hurt my feelings, but it made me better. Right? Do y'all think it's time to kick the baby birds out of the nest? Who think it's time to kick the baby birds out of the nest? Do y'all think it's time to kick the baby birds out of the nest? Or y'all still in need of milk? Are y'all ready? If y'all ready for y'all ready to eat steak and chicken, eat meat, y'all still in need of some milk. Tish talk about nope. What's wrong, honey?
Man, Michael said I need 3 years of training before I start. I'm only like at 14 months, man. Michael said I need 3 years. So, so if I still can't find it, my model entry after 3 years, then you can kick me out. I mean entry model.
My
See,
name,
look.
my name Tim. My name ain't Michael. Teach Thompson, tell him lump me too.
But yeah, man, we can see it clear as day when you put it up there, when you mark out all your annotations and you say, do we see it? Yeah, we see it. Of course we see it without you putting it up there, but it's just the nervousness. I guess that's what it is of trying to, you know,
Yeah.
find that
And
spot.
speaking of that, talk about the nervousness. Like what, you know what I'm saying? And it's out there for anybody. What is like your biggest hang up right now? I'm done talking about price. I'm just talking right now. What is your biggest hang up right now? Is your biggest hang up fear? Is your biggest hang up you can't see the PD arrays? Is your biggest hang up you don't understand where price is trying to go to, meaning you can't see buy and sell programs? Is your biggest hang up whatever? What's your biggest hang up right now? What do you think has made you plateau or you can't break through to the next level?
Trying to look for everything everywhere, trying to look for too many PD arrays. You know what I mean?
Impatience.
Yeah.
Impatience, looking for too many PD arrays. What else? What else we got? Impatience.
My biggest hang up is staying in the trade
Okay.
because there's discomfort once I'm in the trade and I want to get out of that as soon as possible, but I need to stay in there longer to make the profits.
Okay. And holding trades. Okay. All right. What else? What else y'all got? Anybody else got anything?
Over trading.
Overtrading as far as trading too many times or over leveraging. What is it? Like taking too many trades on or over leveraging? Which one?
Both.
You say both?
Yes.
All right. Impatient. Looking for everything everywhere. Too many PD arrays. Staying in the trade, over trading, and over leveraging. All right, let's talk about it. Impatient, right? Impatient. The biggest culprit for being impatient is that you don't truly understand time and price, right? When you truly understand time and price, that will help you with your patience, right? That will allow you to be able to walk away from the chart and not sit there and subject yourself to torture, right? This right here, this beautiful little screenshot of TradingView that I put together a while back. This actually says September 9th, 2024 at 8:20 p.m. This had to be during a Q&A session. I don't know when that was. September 24th at 8 p.m. That was on a Tuesday night. Oh, that had to be just a regular that was a regular price action recap on a Tuesday night. Right? On a Tuesday night. That's a regular price action recap. Right? But this handy dandy little chart right here, this right here, this gives you all of the key times, the key algorithmic times, right? Take a screenshot of this right here. I've shared this in the Discord before. I don't know where it is right now. It's, Ask one of your buddies to send it to you. Take a screenshot right now, whatever. Right. Let me move me out. I'm gonna move me out the way so you can take a good screenshot. Right. If you're on YouTube. Right. So now I'm out the way. You got the screenshot taken. Now I'm gonna put me back. Okay, so looking at this right here, who said impatience? Who said impatience? Was that Jada? Who said
Jada.
All right. So what session is your do you trade? Asian, London, or New York?
Asian and New York.
Oh, so you greedy. All right, Asian in New York. Okay.
Depending on when I'm not working.
Okay, so Asian in New York, right? Was not on this list right here. And you're gonna need to write this. You in the Asian Assassins. Are you in the Asian Assassins, Jada?
Yes, sir.
Okay, so you already got it. What's not on here is the is like the 6 to 7 open, the sweet spot, and then the first 90 minutes, right? So being that you're an Asian assassin, you know you're looking for your range to be set up. You're looking for your opening range to be set up during the open. That's 6 to 6:30 during that 6 to 7 o'clock hour, right? Your sweet spot is from 7 to 9, right? And you're looking for your opportunity to trade inside 7 to 9. And then your first 90 minutes is from 8 to 9:30 because the Asian session actually starts at 8 o'clock, right? So you're basically looking for something to transpire between 7 and 9:30, right? And so that's your time window, right? Your kill zone is from 7 to 12. So inside your kill zone, right? You know, the beginning where you're looking for to set up, right? 7 o'clock is when you're looking for the buy and sell programs to start. That's why you're waiting until 7 to see how it interacts with your liquidity that was established, right? So you're waiting for time, right? And then you're looking for what price offers you inside that sweet spot up into that first 90 minutes, right? So this is when you're looking for something to happen. So your time, you got your time window for the Asian, right? For the New York, same thing. You got your New York morning, right? In the New York morning, you're looking for, you got your opening range, 9:30 to 10, right? That's your opening range. You have starting at, let's just say 7:30 a.m., right? I like to start at 8:30, but the kill zone starts at 7:30 a.m. So you're looking for relative equal highs and relative equal lows from, just say 7, from 7 up until 9, right? You're looking for relative equal highs and relative equal lows, right? If you want to engage with the pre-market, you're looking for something to set up between 7 and 9, right? So any relative equal highs, relative equal lows, new liquidity pools that's being created between 7 and 9, if you're going to try to engage before the market opens, right? Same thing. Let it set up, let it engage based off if you're in a buy or sell program, right? If you're in a sell program, let it engineer sell side, go engage buy side, and look for a chance to trade back to that sell side. If you're in a buy program, let it engineer buy side, go engage sell side, then look for a reason to trade back to that buy side. But you're doing it inside these pockets of time, right? Your pre-market pocket of time, your New York morning, right? So you got an opening rent. Now you got your pre-market range from 7 to 9, and then you got your 9 to 9:30 is your opening range for the New York session, right? Your 9 to 9:30 is your opening range, right? And then once you get your opening range, right, you're looking at how's my opening range interacting with my pre-market. Is it interacting, right? Is it doing anything? Have we engineered the buy side in a buy program prior to the New York opening range, right? If we have, then that engineered buy side can be a target outside of the buy side in the opening range, right? But Tim, what are you talking about? I'm glad you asked that question, little Timmy Rock. Who that? Is that your grandma, Jesse? Right. So, Tim, what are you talking about? I'm glad you asked that question, right? So, hey, Auntie. Y'all hold on. I'm gonna holler at my auntie. Tell me where I'm at when I come back. Hey, auntie, how you doing? So Chris ain't wake up. I woke Chris up at 3 o'clock. And he back there locked up in the room looking for you. Yeah. No, June. Yeah, March.
Okay.
It's one day. One day.
And we gonna be gone.
Where y'all live?
I think 11.
Oh yeah. He coming that next week.
Thank you.
All right. We have, if y'all, if you want to come back, we have.
Okay.
All right. Ew. Okay. I'm back. So get out of the way, writing tool. All right. So okay. So what do I mean? This is your opening range. This was our opening range high at 9:30, right? This was our opening range low at 9:30, right? For the sale program. We was in a sale program coming into the session. We had a high, we made a low, right? Once we made our low, what do? We engineered sell side liquidity, right? We came in, we engineered sell side liquidity. What do? We went and engaged the buy side from the opening range, right? And then we came back and we attacked that buy side. I mean, that sell side that we engineered, right? Okay. What else did we attack? We attacked higher time frame sell side from outside of this range. All right. Now, prior to, right, set engineering this sell side and attacking it, we engineered buy side during the pre-market, right? During the pre-market, we engineered buy side. Okay. This buy side was engineered. We manipulate away, right? Once we manipulate away, what do we engage? We engage our opening range sell side, right? Right. So we have our opening range buy side, opening range sell side, right? We come down as we're coming down to complete our sell program for the morning, right? Once we do that and we start to come back up, as when we interact with the sell side from the opening range, right? As we go back up, back to the buy side, where do we go? We go to those engineered highs that happened prior to the open over here during the pre-market. That's what I mean right there. If when we started here, we did not attack the pre-market high, right? We came down, engineered liquidity with the pre-market low, and then we took out the pre-market low. Once we took out the pre-market low, we went back and took out those engineered buy sides from the pre-market. That's what I mean. How is price interacting inside of the opening range? How is it interacting with the pre-market levels, right? Now, price won't always be there interacting with it. Sometimes you're pre-marketed here and then the actual opening range be way down here. If it's not interacting, who cares? It's not interacting. Just look at your opening range. But if it is trading near these key algorithmic time and prices, that's what you're looking at. But those are your times that you're looking. If it's not setting up during your time, who cares? But you know what times to be looking at the charts for something to be happening, right? This is when I want it to be setting up. This is when I want it to be giving me an opportunity. Now it's too late. I need to wait until the next session, right? This is your roadmap right here to help with impatience, right? Looking for too many PD arrays, right? The problem with looking for too many PD arrays is because you haven't mastered one thing yet, right? You're not comfortable with one entry type, one entry model. You're not comfortable with just one thing. So you're looking for everything. You have to figure out, what does my eye see best? What just jumps off the screen at me? Once you figure that out, you couple that with order flow, right? You learn order flow first. Are we in a buy program? Are we in a sell program, right? Once you understand order flow, then you say, okay, I know the liquidity is going to be at the top and the bottom of this dealing range. Right now, I just need to figure out what PD array inside this area I can see good, and I'm going to use that as my entry qualifier. Or you can say, I can't see any PD arrays, so I'm just going to use OGOTE, where I wait for an area of accumulation or distribution. And when I get an expansion leg off of some accumulation or distribution, I'm going to run my fib tools and I'm going to wait for a 62% retracement. Or I'm going to wait for the sweet spot. I'm only taking it at 70.5. Or I want the deepest retracement possible. I'm only taking the 79s. Your entry is up to you. But the problem is, you're not comfortable with one thing. So you're looking for everything. Nail down one thing that you can see well, couple that with the understanding of order flow and price delivery, and that'll help you with looking for too many PD arrays, right? Staying in the trade. Staying in the trade, the problem with staying in the trade is you haven't truly vetted your model. You're not sure how accurate this model really is, right? You haven't truly vetted it, right? Because and what I mean by truly vetted it, I mean traded it enough times, right? So because when you trade it enough times, you're going to become more and more comfortable with this model. And then you're going to know a lot of people like to go off of percentages. So you're going to know 65% of the time it's going to go to my full target, right? So you know 65% of the time it's going to go to my full target. So now you're not sweating bullets while you're in a trade. The second thing that's the number one thing. The second thing that makes you hard to stay in a trade is what I think Jada talked about, over leveraging. When you're over leveraged, you feel like you're about to lose too much money. So you're sitting there like, do the whole tight, like, oh, please don't go against me. Please keep going. That's one of the second things that'll make you uncomfortable in a trade. So if you're not over leveraging, just keep like trading your model and you will get used to holding it longer. One thing to help combat if you're not over leveraging is to, if you trade with multiple contracts, start to scale out at low hanging fruit. Take something at low hanging fruit and then lock in better than break even, right? And then that's going to help you get used to, okay, I'm at least taking something, right? And then you can start to collect your data of, okay, I'm trailing my stop too early based off of, you know, my data of trading my model. I'm getting stopped out in profit too many times and it's still continuing to my target. Or, you know what I'm saying, I'm getting stopped out. I'm rarely getting stopped out. And then that's going to help you learn how to hold longer. You got TP1, TP2, TP3. If you're not trading multiple contracts, move down to the micros so that you can trade multiple contracts and start to scale out. That way you're paying yourself something, right? Where you're taking, you know what I'm saying? Or what you can do if you don't want to move to better than break even, right? Scale down to micros or something so that you can take half of your position off once you pay for the trade, right? Once you, like, just say if you get you got 4 contracts, right? You got 4 contracts, and let's just say you're risking 10 points, right? I'm doing it for easy math. 4 contracts, you're risking 10 points, right? When your trade gets to 11 points, right? You take 2 contracts off and leave your stop loss where it is, right? You've paid for the trade plus commission. So now if it comes all the way back against you, you've paid for the trade plus commission, right? But you can still leave the other half of it on to see how far it go. Does it go to your terminus, right? That way you're not in a trade, you're not in a losing trade. You only stand to, you know what I'm saying, be a little better than break even or gain. You see what I'm saying? That's another way you can like kind of train yourself to learn how to hold trades longer. But the 2 main things, you haven't traded your model enough or you're over leveraging, right? And I don't think nobody in the gang got a problem with over leveraging. I don't think none of us do that. So trade your model longer, get more reps in, and it'll get better. Over trading, I ain't got no magic wand for this. This is an individual thing. I ain't gonna pretend like I got no clues to over trading, right? We all spiral. I still spiral to this day, right? I don't have no magic wand. When somebody figure out how to fix spiraling or over trading, y'all let me know. Over leveraging, the only thing that fixed this for me was losing a lot of money. When I lost an amount of money that I didn't want to tell my wife that I lost, and that fixed me with the over leveraging. That right there. When I had to go stand in front of my 5'3" wife and tell her that I had lost thousands upon thousands of dollars from over leveraging. I did not want to have that conversation. That did it for me, right? I know it's real easy to get sucked into like called the prop firms. They let you over leverage, right? If you got $1,500 in your account, you can't even trade two minis on the NASDAQ. You can't even put it on. If you now in the prop firm, you only got $1,500 to lose if you got a $25,000 account. So if you only had $1,500 in your account, you can't even put on 5 micros. I think Apex lets you put, it's either 4 or 5. I think it's either 4. You can't even put on minis. You can't even put on 4 minis if you only got $1,500 in a personal account. You can put on 1 mini, right? You can put on 1 mini, but that's severely over leveraged. You see what I'm saying? So prop firms make it easy to over leverage, right? But if you only have your own capital, right, you can still over leverage, but it's more difficult, right? It's more difficult to over leverage because if you, let's just say, if you only have $1,000 in your account, right? If you try to put on a mini, right, once it go against you, like 1 point, you're going to get a margin call because you're not going to have enough money in your account to hold a position open. So it's more difficult to try to over leverage if you only have your own capital. But over leveraging, that's just greed. You're trying to get there too fast. It really ain't no magic wand to over leverage or over trading. That's an individual thing. You just gotta figure it out for yourself, right? I'm just here. Does Asian, London, and New York sessions all sessions are related with something for analysis and how we can analyze them with the scenario? If you know, please, thank you. I don't even, my reading must not be reading. I'm just here. Does Asian, London, and New York sessions are related with something for the analysis? And how can we analyze them with scenarios? If you know, please. I don't know. Time and price, order flow, buy and sell programs, everything that we talk about every day. Right? That's how you analyze them. Are you in a buy program? Are you in a sell program? If you're in a buy program, right, wait for the market to engineer buy side liquidity, go attack sell side liquidity, and then look for reason to trade back to that buy side that's been engineered. If you're in a sell program, wait for it to engineer sell side liquidity, manipulate buy side liquidity, then look for reason to trade back to that sell side. Right? Understand buy and sell programs. If the order flow is bearish, right? If you're in a sell program, you're looking for reasons to sell in a premium of the dealing range, right? What dealing range is that? It depends on what time frames you use. Are you trading off of a daily time frame? Are you trading off an hourly time frame? Are you trading off of a 15-minute time frame? Right? Whatever time frame you're using, you're looking to trade and you're looking to buy. For example, here, right? This dealing range here, you look for a reason to buy in the discount back to there, right? Right? That's your high, that's your low. You look for a reason to buy down here in the discount of the move. This the high, this the low, that's equilibrium. Below equilibrium is the discount. Look for a reason to buy down here to attack that buy side that was engaged. That was engineered right over here, right? You got this sell side right here that was engineered there, right? This is our high, this is our low of the opening range. This the sell side that was engineered. You look for a reason to, this is equilibrium. You look for a reason to sell in the premium, right? In turtle soup up here, low risk sell over here, right? Short there, anything above this right here to come back down and attack that low. You look for a reason to sell in the premium, right? Every session, the same way, right? Looking for time-based liquidity, right? If you're coming into a new session, right, where you're looking for it to take out a prior session's high, take out a prior session's low, right? We took out a prior session high there. We took out a prior session low there, right? This New York session took out that London high. This New York session took out that Asian low, right? Everything's connected. Time and price, right? As we go through the fractal nature of time, right? You want to see how it engages with time-based liquidity, right? How does it map out for the sale program, right? Are we engineering sell side, right? Just like back here, we engineered sell side over here, traded away from it, came back down to that sell side, right? Are we engineering buy side? We engineered buy side here, traded away from it, came back to that buy side. As you go through the fractal nature of time, right? How is it relating to the buy and sell programs that price is going throughout? Every session is the same. Every session is individual, and every session is together, right? Right. All 3 sessions are individuals. All 3. Think of it as the Godhead. You got God the Father, God the Son, God the Holy Spirit. 3 separate entities, but they're all one. Same thing. 7:45. That's all I got. Hopefully this was helpful.
Very helpful.
You're welcome. And since my dog Sherwin here, I'm gonna leave it up for the replay. Rhonda, if you put together some notes, the Starbucks on me. I appreciate that, Johnny J. Rhonda, if you put together some notes on this one here, the Starbucks. Is Rhonda still in here? Ah, Rhonda gone. No, Rhonda gone. Oh, she said we'll do. I said Starbucks. She jumped me. Oh, yeah, I got it. I'm gonna put together. I'm doing it right now. I got AI on it. You know, AI already take all your words and say, Tim said, Tim said, Tim said. Hey, when I be getting the little AI notes from Zoom, it be sending me, it'd be like, here are the AI notes. And it'd be like, Tim talked about this. Tim said this. Talk about thanks, Rhonda. What am I, chopped liver? What'd you say, Deborah? What am I, chopped liver? Hey, man, I appreciate y'all for hanging out with me. This is a Friday night. It's like 7:46 on a Friday night. You could have been anywhere else, but you here with me. I really appreciate that. Hey, man, do me a favor. Stop and take the time to tell the people that you love them today. Don't just say it. Don't just show it. Say it, show it, and confirm it, right? Why you want to do that? Because everybody's love language ain't the same. You may be showing love in a way that they don't understand, or they can't take, or they can't receive. They can't even reciprocate because they don't think that you love them like they love you, right? Figure out their love language. Speak in their love language. If their love language is words of affirmation, shower them with words of affirmation. Don't go and give them a massage. They may not like physical touch. Don't go buy them a gift. They may not like gifts. You know what I'm saying? Just speak in their love language so that they can receive the love you're trying to give them, right? If you're blessed enough to have both of your parents, I'm still blessed enough to have my mama. I thank you, Lord, for that, right? If you're blessed enough to have both of your parents or just one of your parents, call them up right now. Make sure you let them know that you love them. Hey, mama. Hey, daddy, how you doing? Just call. I'm just thinking about you, right? Let your spouse know how you feel about them, man. If you a female, a woman, let your husband know how you feel about him. Men need to hear that too. We need some confirmation that we are loved. Do that for me. Do that for me. Appreciate y'all. But seriously, let your loved ones know that you love them, man. Ain't nobody promised tomorrow. You feel me? We all got a date with that the hooded figure that they put on TV with the sickle called death. We all got a date with it one day. We don't know our day, so take advantage of the day while you can, man. Until the next time I decide to get on Al Gore's internet and share my thoughts on this thing they call price action. It's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. You know what I'm saying? Big spot, I ain't never far. Y'all be safe out here in these trading streets, man. Gone.